Hello and welcome to Trade Finance Talks TV. I'm Mahika Ravishankar, Assistant Editor at TFG. When I think about the process of paying, I imagine tapping my phone on a card reader and the money being deducted from my account without further thought. But in international payments, of course, the process is far more complex. The way for the industry to move forward requires a careful balance between security and innovation, all to increase payment speed to near instantaneous. To discuss this further, and as part of our C-Suite Speak series, I'd like to welcome Marianne Demarchi from Swift. Marianne, welcome to Trade Finance Talks.
Thank you. Thank you for having me.
So to kick off with a quick introduction, who are you, where are you from, and what do you do?
So Marianne Demarchi, I'm based out of Paris. I'm covering Europe, Middle East, and Africa at Swift. And previously, I have a background in financial markets. So Euronext for a couple of years, and then asset management, and where I led some business development functions and marketing functions. And then I led also a fintech, the IT teams of a fintech in payments, and finally Swift.
Great. Thank you so much for that. And to kick off with the interview, doesn't feel like you can open the news without avoiding geopolitical turmoil in every headline. I was wondering how Swift is adapting its international payment infrastructure in these increasingly volatile environments.
Yeah, thanks for your question. Actually, it's indeed a very important question. Well, basically, the world is really changing. There's geopolitical turbulence, which brings unpredictability to the business environment, to businesses themselves. We are also seeing a shift in traditional trading relationships. So this is really a situation companies of all types must navigate and ensure that trade, finance, payments continue to flow freely to the benefit of all communities. That being said, the advances in digitization that we're witnessing across the world really present great opportunities to bring about prosperity across the world. But there's one thing that we need to really remain focused on is to ensure that global trade, global finance remain interconnected and interoperable. So interoperable meaning that you can trade across platforms and systems easily as we do today. And we need to guard really against creating more frictions across the global trading and finance global trading environment, especially through financial fragmentation. Financial fragmentation is really the reduction of global economic integration, so which disrupts at the end, cross-border flows, credits, investments, and so on. And financial fragmentation can have damaging impacts. And this is what we all need to take care of and to be really careful of that and cognizant of that. Because there's a recent, for instance, study that we have commissioned to the Economist Impact, which has projected that if we continue on that pace of fragmentation, if it accelerates, it can really have tremendous negative impacts on global GDP and also on millions of jobs that will not materialize.
Thank you for that. So financial fragmentation is definitely the big one to be aware of. And in terms of payment speed, how do you balance this need with security?
Well, in terms of, indeed, I mean, it needs to be a balance. It's not just speed, it's just innovation and security. In terms of speed, I would say that the transactions across the SWIFT network are exceptionally fast. We have more than 90% of all transactions on our network. So from bank to bank, the interbanking pipe, I would say, or rails, that are processed in less than an hour. So I mean, seconds, minutes, but overall, and we're talking about millions and millions of transactions every day. That are processed in less than an hour for 90% of them. So we are even above the objectives that the series of countries around the G20 countries have set as a benchmark. So first of all. Second of all, in terms of innovation and security, I mean, security is at our heart, at the core of what we do. And it's really our DNA. We are processing about the equivalent of the world GDP every 3 days. You process the world GDP every 3 days. You'd better be really strong on your foundations. And so security is at the top of what we do, of our investments. And so it's a balance of, how do we innovate and without impairing security, and also how we innovate so that that it benefits most of the banking community. You know that more than 11,500 financial institutions are connected to the SWIFT network. So we have an unparalleled reachability, and we need to make sure that the innovation that we do benefits as many as possible.
Great, thank you. And I want to talk a bit more about that interconnectedness and interoperability, which you mentioned before, maybe turning the discussion to collaboration. What models of collaboration between private and public stakeholders have you found effective in addressing that financial fragmentation, which you mentioned, particularly within your region?
Yeah, well, it's an important point, because we are really convinced that nothing can be achieved at scale across the world without a tight collaboration between private actors and policymakers, regulators, and so on. So it has to be really a close collaboration to avoid the negative impacts of fragmentation, but also to continue to innovate. For instance, one example I have in mind is the work we do to support the G20 roadmap to enhance cross-border payments. So I've just talked about it, but it's a roadmap that sets clear objectives to improve cross-border payments, to make them cheaper, faster, more transparent, more accessible. And we really need to have the overall community, not only the regulators, but also the banking community, SWIFT, all working towards the same direction. And this is what we are actually doing right now. We also have, for instance, in terms of collaboration, everything we do in terms of innovation, for instance, is in close collaboration and links with the financial community. We're not just doing innovation for the sake of doing innovation, but really to make sure that it responds to a need of the financial community. So we have a lot of experiments that we've done, for instance, on digital assets, to make sure that we onboard nearly 40 financial institutions, central banks, and so forth, to experiment the way of how to connect to these different platforms of digital assets. It could be stable coins, it could be CBDCs or central bank digital currencies. So, and to make sure that they can operate between themselves, those new platforms, and between these new platforms and fiat money, so the existing payments platforms. So that's really a key thing. We have also cross collaborations with institutions like the BIS Innovation Hub, where we participate to their main projects. So it's really key to have this close relationship, because what we're trying to achieve is really big challenges to really improve the way people invest, trade, finance, and pay each other, and to have a stronger digital inclusive economy. So, and in this context of fragmentation and geopolitical tensions, it's very important that we keep this close collaboration.
And speaking of that, I want to talk about the global economy and how it's predicted to contract. I read the IMF report a few days ago, which mediated its forecast of GDP growth in this year, lowering it by 0.5 percentage point to 2.8%. So in the context of economic contraction, how are you, as you say, encouraging companies to invest innovatively? And how are you prioritizing innovative investment at SWIFT?
I mean, indeed, it's an uncertain context that we are in, as I was also mentioning at the beginning. And it's very important to make sure that not only taking into account the economic context, but also the mega trends that we see in the market. So I've talked about fragmentation. We also see a mega trend in terms of technological innovation. Of course, it's completely reshaping the way financial services are going to be offered and rendered and serviced. We need to make sure that we anticipate those trends. So let me I talked about the fragmentation, and it's also pretty linked, these technological innovations that we see. There's a lot of new platforms, payment systems, new forms of value. So we talked about it, CBD, central bank digital currencies, or tokenized assets, or stable coins, or whatever. There's a proliferation of instant payment systems in the world. And all these new innovations, it's good because it gives more choice to the customers. And we firmly believe that the industry is going to continue to be fragmented, not only because of geopolitical reasons, but also because of technological innovations. And therefore, it's very key, it's very important, and we play a crucial role in this, is to make sure that it still can be, all these platforms still can be interconnected and still can be interoperable. Why? Because we need to realize that the global economy actually is really based on a complex network, interconnection of systems underneath, I would say. And if these connections and interoperability between these different platforms and systems does not work anymore, it's the global economy that is clearly impacted. So interoperability, connectivity, making sure that all these different innovations can still, seamlessly operate between themselves. This is our core innovation, I would say, path.
Oh, I really like that way of thinking about it, because people always talk about interoperability in terms of legislation, or more systematic kind of processes. But I like the idea that you need to ensure interoperability between CBDCs and, say, fiat currencies. You just need to ensure everything in a wider ecosystem works together. It's not just necessarily about one country being able to operate in another, for example. Just to build on the digital point a bit further, and you touched on this, but how do you see the proliferation of CBDCs and other digital currencies affecting SWIFT's role in the international payment ecosystem, but particularly in Europe?
First of all, I would like to say that SWIFT is technology and currency agnostic. So whatever the technology, underlying technology that different systems are using, whether DLT or traditional technology or other types of technology, we are technology agnostic. So we can connect and we can operate different type of technologies. We are also currency agnostic, so meaning that you have more than 200 currencies on our network. We're not a single currency network. We have all currencies. And so to come back precisely on your question, is linked to what I was saying previously. So indeed, there's a proliferation of innovations in the market, which can bring a lot to all players, I would say, and all businesses, individuals that trade, that invest, that pay across the world. But what is very important is to make sure that they are not digital islands, like just closed loop systems where you cannot really send payments across the world. And all these CBDCs, for instance, have been thought of, and most of them are just projects, but they have been thought of for domestic or regional purposes, which of course, it's for the benefits of a population of some countries, some regions like Europe, but not necessarily to make sure that those digital currencies or other digital assets can, be exchanged with other digital currencies or fiat money across the world. And we see our role as a key player to really continue to glue, I would say, the overall financial ecosystem, to support global trade and global growth, to make sure that there's no further fragmentation that could hit very badly the economy. As I said, massive impact on the global GDP, on nearly 300 million jobs that would not materialize if fragmentation, which can have many, of course, factors, but including the proliferation of different systems that cannot be interoperable and are not connected. And we will be here to ensure that we are still supporting global trade and global growth by connecting and interoperating these different platforms and technologies.
Great. And I guess to finish off, just maybe wrapping up everything we've discussed, maybe in one or two sentence summary, what do you think is the responsibility of providers like Swift in building economic resilience around the world?
Well, Swift is quite a unique company. It's a European company, but completely international. We are present in more than 200 countries, currency agnostic, many different currencies on our network, connecting about the whole financial ecosystem, connecting also big corporates. So we have this unique role because we are a cooperative as well. We are not for profit. So our focus is not to maximize revenues or profits, but really to maximize the value of our network to the whole banking and ecosystem, financial and businesses ecosystem, and to resolve complex challenges. So we serve a little bit as an international public good, I would say, to promote financial inclusion, standards, inclusive innovation. And if I go back on standards, for instance, because we talked about the financial inclusion and also the fact that the system, the ecosystem still need to be connected, but standardization plays a very big role as well. And global standards like the ISO 20022, for instance, we are migrating the whole international payments later this year, will really reduce complexity. I mean, all payments will speak the same language and use the same standards. It will bring also richer data so that financial institutions can build upon that to even increase anomaly detection, fraud prevention, also new services. So that's a very important point. We are also, providing and collaborating with other, as I was saying, platforms or systems. Let me take, for example, the wallets. In some parts of the world, you have, for instance, in Africa, but in other parts of the world, in Asia as well, maybe less developed in Europe, but in Middle East and Africa, it is. The wallet. I mean, people have not necessarily only a bank, but they have usually wallets. And we need to make sure that someone from Europe or the States or wherever can send money to someone who has a wallet. And this is something that we are working on. So really to foster as I said, the interoperability and the ability to offer the best payment options to everyone. And this is what we are really focusing on, and to make sure that we also collaborate, as I was saying, with the public sector. I think that will be really crucial.
Thank you very much for that. That was really fascinating to hear. And I guess the takeaway, if I was to say in three words, maybe interconnectedness, interoperability, innovation. Nice alliterative takeaway.
And resilience and security, very
Resilience and security, but it doesn't start with an I, so it doesn't work. Marianne, thank you so much for joining me. It's really been a pleasure and I've learned a lot.
Thank you. Thanks a lot.